Welcome back to Fast Market, everyone. Kevin Hinks in for a vacationing Tom White. I've got Nick Theodorakis, and I've got the Vice President of Research for LikeFolio.com, Miss Megan Brantley, coming on the show. Megan, thank you so much for coming on. As always, we're looking at Best Buy. What do you got for us, Megan? This company trades at a very low valuation. It got a very high dividend. What is the overall trend on Best Buy right now?
Yeah, so whenever we look at this, especially from the macro perspective, a lot of our high-level indicators are showing a pullback in consumer spending. So we see more consumers who are talking about trading down, maybe to a still high-quality brand but a lower cost. We're seeing a lot of consumers who are talking about searching for deals, and we're seeing just a slowdown in these big-ticket item purchases. And so that's not necessarily the news you want to hear if you're Best Buy and you're operating in consumer electronics and things for the home and upgrades and really this discretionary type of feel. And you can see this whenever you look at Best Buy's consumer demand. So overall demand mentions of consumers who are talking about shopping with Best Buy online or in store, those are down by about 36% year over year. So I will say the only positive spin out of this decline in consumer demand is this has been something that's been going on for quite some time now. So we do see some signs of normalization in that decline in demand and decline in consumer purchases with Best Buy. And so because of that, whenever you look at the chart of purchase intent, you might say, oh my goodness, this is a really bearish looking chart, but we're actually pretty neutral when it comes to Best Buy, just because that demand decline has started to level off and started to normalize. So we're seeing this not just impact Best Buy, we're seeing demand decline and mention volume declines for a lot of the major retailers in our universe. Whenever you look at Target, when you look at Costco, Amazon, especially, Best Buy is at the lower end whenever you look at the consumer demand decline, but we are seeing this kind of industry-wide as consumer spending really feels a lot of pressure.
Hey, Megan, as you compare it to other companies that you just mentioned, the Costco's and the Targets, where it's more of a one-stop shop, does that factor in at all? When I think of Best Buy, I just think, you go there for electronics versus if I'm budget-minded now, right, I can go to Walmart, I can buy, my produce and a TV, and both of them seem cheaper. Best Buy numbers look great for the record still, right, in terms of earnings, and I think it's fascinating. But are you seeing that come through where kind of the multi-stop shop versus the one-stop shop in this environment changing at all?
Yeah, whenever we look at the overall mention volume for all of the retailers, 5 specifically, if you're looking at Walmart, Amazon, Target, Costco, and Best Buy, we actually have Walmart at the top of the pack, which I think is really fascinating and speaks to the point that you just made, where a lot of consumers are trading down. I know that Walmart mentioned on its last report that, they're capturing a larger number of those high-income shoppers. And so, they're growing their potential audience base that maybe previously would have shopped at a Best Buy or, splurged at a Target or something like that. And so Walmart's mention volume has actually increased by 5% year over year. And that's the only retailer of all those mentions that is experiencing some type of growth. And partially that's to do with its price point. I think that, long term, whenever we look at this, we often look at consumer happiness levels. And that's an area where, again, we see Best Buy struggling. We also see Walmart struggling a bit. So it's a little bit of a mixed bag there. Best Buy does have a higher level of consumer happiness. So consumers who are going to Best Buy for these purchases generally report a better experience. But at least in the near term, I think consumers are, they're weighing that price and that perceived value versus the overall consumer experience when they're making these purchases.
Megan, your data in its entirety is a little bit hesitant on Best Buy, and I understand that. But I'm going to give you 2 reasons to be a little more positive on Best Buy. Number 1, in fiscal 23 that ended this past January, they made $6.29 a share. That is a lot of money for a company that trades at this valuation. That gives them about an 11 PE. But here's the more cyclical view of Best Buy. Everyone knows what happened in the pandemic, right? When everyone upgraded their electronics and the need for upgrading more went away. But if the electronics replacement cycle is 3 to 7 years, guess where we find ourselves in the next year or so?
Yep, we're right
right
there.
in the middle of that, that computer, that TV, that iPad. It's all getting old, Megan, and you're going to start getting into that range in a cyclical business where people are going to start looking again to replace things. Am I off base here?
No, I think that that's a really important area to watch for. Specifically, if you start to see these resurgences and these mentions of consumers who are talking about replacing their electronics and talking about upgrading, we just aren't seeing those yet. So that might be indicative that consumers are just putting this off a little bit longer than they normally would have in this macro environment. I think one potential positive for Best Buy, an area that we're watching, is their membership option. So this is kind of how Best Buy differentiates itself from a lot of other peers, is its services and the tips and help that it can provide and the perceived discounts that it provides. And one thing that we've noticed is in the past, those membership mentions and usage mentions have dropped significantly. But Best Buy just announced, they're kind of restructuring this, and I think rightfully so. Whenever you look at this chart, you can see, they definitely need to restructure because people aren't using it, people aren't signing on, and they're providing some tiered options so that people can get in at the level that they're most comfortable with and hopefully find some type of recurring revenue model that meets their needs. So I think this is one that we'll be watching to see if this change kind of, brings consumers on board, because we know that these membership options, especially, if you look at Costco, that's been one of its biggest value props as a company, is just it gives consumers a reason to come back and shop. And so we'll see if Best Buy can get any traction there with these changes. So far, though, we aren't seeing any of that traction yet. We aren't seeing those upgrade models. So that's a little bit of a pause, and the reason for our pause whenever we're considering Best Buy as, a bullish opportunity.
Sure. Yeah, that Best Buy service mentions graph that you just put up on that looks ominous in terms of its weakness. And but Megan, thanks for coming on as always. Thanks for spending some time with us. That is Megan Brantley, Vice President of Research at LikeFolio.com. Have a great weekend, Megan.
Thanks, Megan.
Thanks, guys. You too.
All right.